The stock market today is rallying, and I'm going to talk about why that might be the case today, as well as whether or not this is a bounce in the context of a bigger bearish move, or if this is the beginning of a return to the highs. I'm going to give you my full thought process on this. Let's go ahead and jump in. So in this recent move, I've had a couple winners and a couple losers. Let's start on the positive note. I sold a lot of puts and a lot of covered calls recently in my options trading, and a lot of tech stuff. And almost all of that stuff is in the green right now. I sold, semiconductors ETF, which is very green. I've sold puts on the XLC, which is communication services ETF. So a lot of these things are very, very green, as you can see on the day. But I'm going to tell you also a little bit about a loser that I took here this morning. So if I switch over to the Russell is not playing nice with me. I ended up closing this trade actually slightly early, so I am out of the trade now. Even though it didn't hit my stop loss, I am an advocate for if the trade is not working out, just cut it. And so I cut the trade here. And if it continues to push higher, I'll feel good about it. And if it drops off a cliff right now, I will cry a little bit, but that's okay. Trading is not easy. And, to be honest, my thesis here with the Russell going lower from this area of resistance was thrown out the window. So I had to cut risk. And so I closed out of my Russell trade for about $1,100 lost on this particular position. I did also add one more trade here that we'll talk about. So let's switch over to silver. I went, long silver here. And I'll show you my current P&L there. So I'm up $259. So cushioning a little bit of that loss that I took on the Russell. But overall, very green on the day today because the market is ripping, and a lot of my tech stuff that I got exposure to, you can see it marked over here, SMH, XLK, and XLY, both bouncing. I have bullish positions on all of them. So very interesting to see that move here today. The dollar index is down on the day, pretty good after what we saw in the news. So I'll tell you a little bit about that number now. So this morning out of Europe and the US, we had flash manufacturing and service PMI numbers. Let's start with Europe really quick, where we saw 44.9 for manufacturing. That was lower than expected. 50.5 for services, higher than expected. We'll jump over to the UK. Flash manufacturing came out lower than expected, and services came out higher than expected. But for the US, what really got the markets moving this morning was flash manufacturing and services both came in red, or lower than expected. Now, this means that purchasing managers for the manufacturing and services surveys that were conducted here actually saw kind of a contraction going forward. So why on earth would that be positive for the stock market? Before we talk about the stocks, I think it makes sense why the dollar index would sell off. That would show that perhaps the US economy is seeing some signs of cooling down a little bit. So the US dollar got sold here this morning. That makes sense. But why is the stock market trading higher on this data? Well, here's the breakdown on that. The stock market likes this data because what that means is that the likelihood that the Fed starts cutting rates sooner actually increases, it improves, because cooling economic data might force the Fed to say, hey, things are cooling down, let's go ahead and cut rates so that we don't overwork the economy. So the stock market really loved this number this morning. I want to also refresh on the commitment of traders data and show you what we saw ahead of this week. The S&P 500 did get some buys, and this is really good news for all of my bullish positioning on VOO, which is the S&P, and the tech ETFs that I sold puts on, as well as some of them I've been assigned on. I'll talk more about my options trades in just a moment. Outside of the S&P 500, we also saw buying on the NASDAQ, silver, copper, the Australian dollar, the South African rand, Kiwi, and US 10-year bonds. Now, what am I talking about here? What is this screen? If you've never seen this before, what we're looking at is the commitment of traders data, and this shows us what institutional money is buying and selling each week. Now, there is some lag baked into this. This is not down to the second by second buys and sells that institutional money is doing. That would be nice if we had that data. This is weekly, but it's still very useful for traders because we can see the appetite for or lack thereof when it comes to buying or selling for different assets and commodities and currencies. So here are the most sold assets week over week. We can see the net change. That is going to be taking a look at the previous week's long percentage versus this week's. Did we see more long exposure or more short exposure? And we've sorted this column or the whole table by this column. So these are your things that have seen the most relative increase in bullishness versus things that have seen the most increase in relative bearishness at the bottom. In terms of the top setups, I told you that I went long silver. Let me show you why. Part of the reason was that silver still has a 7 or bullish reading on the edge finder. That's after considering sentiment, technical analysis, and economic data that we've seen. Strong economic data it helps out the demand side for silver. Remember, silver is an industrial metal. If the economies of the world are strengthening, there's going to be more of a demand for silver, especially when it comes to things like solar panels and airplanes and computers and chips and all sorts of different stuff. Silver is going to be in demand. Same thing with copper, but of the two, silver is getting a stronger read here. That's why I went long. I'll also show you why I went long here. So here's the technical chart, and I'll talk about gold in just a moment, but silver pulled back to a level of support and tagged support and has bounced so far. My stop loss is below this wick low, so if price does, plummet from here, I'll be out of the trade and move past it. But overall, nice upward trend. I like the opportunity here to the upside. I think the risk reward is decent for us to retest those highs at some point in the near future. And when we take a look over at gold as well, you can see gold is down slightly on the day while silver is up slightly on the day. Is this a pullback buy for gold as well? Well, you've got some levels of support here looking left, though we've broken this key level of support. So I'm actually less interested in gold right now than I am in silver. I'll show you why I think gold could actually kind of go sideways or even slightly lower. Meanwhile, I think silver could outperform. The main reason why is that economic data being strong out of the US favors more the industrial metals than it does the safe haven metals like gold, right? Gold will typically do well if the economic data of the world is actually shrinking or deteriorating while inflation is high, right? That's the scenario, that's that stagflation story that helped us to get to where we are right now, but has fizzled with stronger than expected economic data. You can see that exactly reflected in the 10-year yield, right? Remember, the 10-year yield is basically a reflection of what the bond market thinks of the economy. If this is going up, usually it means that the bond market is thinking that the economy is strong, things are, relatively stable, and the demand for bonds is low because people are going into risk assets instead of risk-off ones. Now, in an environment where you see risk-off really come into play, you could see, a swing back the other direction. As demand for bonds increases, remember, yield would come down and vice versa. Now, this rise in the 10-year yield recently is spelling not great things for gold. It doesn't help the story for gold. And I had somebody on my live stream today say, Nick, please just talk about gold. And I was talking about the 10-year yield. And what I pointed out, this is exactly what you need to be looking at if you're talking about or trading gold and trying to be a fundamentalist. The 10-year yield is very, very important, because if this is rallying higher, what that means is that the bond market thinks rate cuts are not coming. If this thing is dropping, that means the bond market thinks rate cuts are coming sooner. And if rate cuts are coming sooner, that's bullish for gold. If rate cuts are not coming for a while, that's bearish for gold, right? So keep that in mind when you're doing your gold chart analysis. And despite oil coming down recently after perhaps we're seeing some de-escalation in the Middle East, it's still staying stubborn around this 81 to 82 range. Keep an eye on this. We've come into a level of support here. I'll draw that here on the screen. So if I just get my supportive level, you can see we found support right around that $81 mark for US WTI. We'll see if this continues to hold. If there is any sort of escalation coming out of the Middle East, perhaps, buyers are in here loading up. Who knows exactly if that will happen or not. Let's hope for the best, and let's hope that, oil travels lower in the meantime because of peace talks or kind of a common ground. Let's just hope for peace. But we'll see. Unfortunately, some traders are still probably looking to hedge their risk exposure from what could be transpiring in the Middle East and staying bullish oil. Here's a quick look at retail positioning. We can see the contrarian signals basically demonstrate where retail traders are very long or very short. We get a contrarian signal the other way. So for example, right now we're actually getting a slightly bearish read on gold and silver as retail traders are very heavily buying the dip. Now you might say, Nick, you're buying the dip. But remember, just pause for a second. Retail positioning is a useful indicator, but it's not the only indicator that I look at. Wouldn't it be nice if we could just fade retail traders and all be profitable? It's really not that easy, but it is one of the columns that we look at in our calculation for bullishness or bearishness on the edge file. Finder's, algorithm that it uses. By the way, if you don't already have a copy of the Edge Finder, the sale is ending. This is kind of a last call. If you want our biggest discounted price of the year, here's how you can get it. The first link down below in the description will take you to a chat link where you can speak directly with someone on my staff about getting a copy before the sale ends. Fair warning to my friends who watch this channel regularly. If you're somebody who wants the Edge Finder, and I know there's a lot of people who have planned to buy it for some time and they're just working their way towards it, this is your last chance to get the biggest discount ever. The price is going up. It will probably never be this low ever again. So take advantage. Do it now before you see the price go up the next time you're ready to buy it. Okay, so if you're thinking about it, please just chat with us. We'll work with you to make sure that we can get it to you. As any questions that you might have, if you need any help, take advantage. Click that first link in the description down below. All right, and here's a current look at all of my different options trades that I've got going on. I sold puts on Tesla. That trade is going well, although we do have earnings after the bell today. So be aware, this is a 1 month out put that I've sold on Tesla at 115. I have collected some premium already, or at least floating. I sold these puts for $2.42. It's trading at 181. Remember, when you're selling a put, you are short the put. Decreasing premium value is better for you as a put seller. VOO, so I am long the S&P 500. I have 400 shares, and I've gone ahead and sold calls against my position. My thought processes here on this is that while I do think that there is a bounce happening on the stock market, and that's great, I think that there is some limited upside for that. So what I've done, and I'll pull up the chart here for you. If we go to VOO on my options platform here on WeBull, I've sold puts at 480. This white line represents where my max upside essentially is. Now this is a 1 month out. So if we trade above this level, I will cap out my gains at $480, per share. And I bought them. My average entry price is $460 minus the premium I paid. So my average entry price is $458.10. So I'd make money on the stock shares or the ETF shares, as well as on the covered call that I've sold. Now you might see that I'm floating a negative number. That is simply unrealized, negatives, because when I sold these calls, they were receiving less premium, but no matter what, I will make money on selling these calls. I know it's a bit confusing, so if you'd like more details on that, we'll leave a link in the top right hand of the screen right now on this card to my option strategy if that's something you're interested in. If you're also looking to get started with options and you would like to trade with the platform that I'm using, it has become a pretty substantial component to what I do in my trading. It's a great way to create pretty consistent, high probability trading setups and income. If you're interested in that, there's a link down below in the description to get access to the brokerage that I'm using. Also, if you're looking to trade with CFDs or you're looking to trade Forex in the US, several brokers are listed down below in the description. If you use those links, you'll be helping out the channel, but also each one of them has special perks for you guys as subscribers and viewers. I've set up different deals with different brokerages to get you guys some great free value, whether it be free shares, whether it be a sign-up bonus, a welcome bonus, whatever you'd like to call it. There's details down below in the description. So check them out. Why not take advantage of some free money and enjoy the hustle. Thank you guys very much for watching. Have a great rest of your day. We'll see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.